welcome to Property Question Time. I'm Stephen Galpin and this is the programme where you can have your property related questions answered by our team of experts. And joining me today are Geoff Vickers, Commercial Real Estate Finance Specialist of Sirius Finance. Welcome, Geoff.
Delighted to be here, Stephen.
Your first time on Property Question Time.
Very first time, and it's a quite exciting experience.
We'll try and be gentle, okay. Sitting on your left is Siadatan, and he is CEO of Connect UK Auctions. Welcome.
Thank you. Thanks for having me.
I think this is your third one, isn't it?
Second.
Is it second?
Second one, yes.
Second time in the studio.
Second time in the studio.
We're going to move straight on, Zad, with your first question, which is this. The house sale market has been very slow in my area, mostly due to the pandemic. I do need to sell my house, and as the agents have not had much interest, I'm considering putting the house up for auction. When choosing an estate agent, it's fairly easy to see who has the best instructions and high success rate. However, I'm not sure how to go about choosing the right auction house. Any suggestions?
Yes. Now,
I thought you might have.
Choosing the right auction house is not an easy task, but however, it is one that everyone has to go through to find out who's the best auction house. But auction company. The best way to deal with that is to phone up the auction company and find out what their success rate in selling is. Now, usually every auction company will have to disclose that to you. One of the better auction companies will have around 75 to 80% success rate. If it's anything less than that, I would want to know why. Is it because they're not pricing it right, or is it because they're not marketing it right? So around 75, 80%, anything above that is fantastic. Anything below that, I would ask questions whether I want to put my property with that company or not. Secondly, as you know, the whole country is changing to online, whereby, as you know, we can't go and sit in an auction room anymore. So you've got to see who is very proactive on social media. Social media, which is Facebook, which is Instagram, LinkedIn. If you go on that and see their profile and see exactly how is it that they are marketing the property or themselves to general public, that is a very big indicator these days as to whether an auction company is up with the times or not. So that's what I would say that you've got to do. Yes.
Zad, I know you run a very progressive company.
Yes.
You have an auction academy.
Yes.
You write books. You promote the auction house in a very modern and digital way.
Yes.
Let me put it that way. Are you finding that's across the board with auctioneers, or are you finding that the majority are lagging a little bit behind this modern digital age?
I would say majority are lagging. You know, they are so used to just hiring a hotel room and get people to come down to and sit and bid. All that, obviously, because of the pandemic, is not happening. They're not allowed to do that. But at the same time, they're too slow in evolving with the time, with the digital time that we have. So if you will notice that there's a lot of auction houses out there that are not doing as well as they used to, only because they haven't adopted the new digital age. And yes, it does affect them, and they're very, very slow in moving with times. Yes.
Okay. Coming back to one of the points that you raised about the success rate and the percentages, you were saying that's mainly geared to perhaps product in the auction being of the right price.
Yes.
or at the right entry level, let's put it that
Yeah.
way. How influential is the auctioneer in determining that sort of guide price, if you like?
People put their property in the auction for so many different reasons, whether it's financial reason, whether it's probate, whether it's not mortgageable for whatever reason, but they've got their own reason. Now, when a seller puts their property into the auction, it's because they want it sold pretty quickly. So, and a buyer buys through an auction because they are looking to get something, to buy something pretty quickly as well. So in order to sell something quickly and in order to buy something quickly, you've got to be able to have some flexibility on pricing. And this is where the auctioneer will take that into account and says, okay, fine, this is the right price for this property if you want it sold quickly, and if you want a buyer to buy it pretty quickly. Just because the property comes into the auction doesn't mean it's derelict. It could just well be that the owner wants a transaction done within 30 days.
So not necessarily an issue.
No, it's not an issue. But the price that the auctioneer, or the guide price that the auctioneer comes up with, reflects the time. It's a little bit like stock market and options. You know, when you buy an option, it has a time to it, and if the time runs out, your option runs out as well. An auction is exactly the same way as well. So it's time based, and the price is time based too. Yes. Yeah.
Geoff, I'm sure it wouldn't be the first time you've been asked to finance a property in an auction.
No.
Any difference in approach?
No, not really. We have connections with lenders who are very, very experienced at dealing with auctioneers, and we have a number of partners who are very, very comfortable in dealing with companies such as yourselves. So. Yeah, no, not at all. It's absolutely fine in terms of dealing with them.
Okay, well that seems to answer that question. So Geoff, we're going to move on to your question now. I'm thinking of starting a property development company and have both the experience in the building trade and a modest amount of capital. Given the current economic difficulties caused by the COVID epidemic, I have in my mind that I may have to start thinking outside of the box in relation to finance for my projects. It seems that I have only 3 options: conventional bank funding, crowdfunding and peer-to-peer or joint venture lending. What is the panel's advice on this, and any pointers to set me in the right direction would be appreciated. There you go, that's a nice deep one.
And a fantastic question to start with, Stephen, thank you. There are deals in the market out there through those 3 various sources, and in addition to those 3 sources, of course, you have the specialist lenders as well. So if we deal with each one in turn, if we go for the high street lenders, yes, they have become more cautious, obviously. Their funding is a lot tighter. They're worried about the economy at the moment, and they're looking after their existing clients rather than funding new monies. We are now seeing the high street coming back into the market now, and naturally their pricing is always attractive. However, for those where their experience is not as great as the institutional and corporate property developers, we're actually seeing more and more specialist lenders getting comfortable with those entering the market. And there are deals to be had for those as well, and it's a flexible approach. We look at each individual case and see what kind of capital is available, what is their experience, what is the experience of the contractor as well, and we will look to put in a bespoke package for them. So there is a growing appetite in the market, and it's a wide market, not just constrained to those 3 that were mentioned in the question. Crowdfunding, that's becoming more popular, certainly. Why wouldn't you want to use somebody else's capital to evolve your project? And we're seeing more and more of that, and we're getting involved with companies that are involved in crowdfunding as well.
I think the only thing I think about crowdfunding is that, I mean, sitting on the end of that, I would just wonder how I'd relish the day having about 50 or 60 investors phoning me every day to see how it's all going.
Well, I think that's absolutely the thing. You've got to be very, very careful that you're not actually being instructed by a number of people because it's their money and not yours.
Yes.
And by the way, they will be wanting their profit on that as well. Of course, if you're comparing crowdfunding to conventional finance, you're going to find that a lot there are more costs to think about in that respect. On to joint ventures. Yes, again, we have a number of clients who are working with joint venture partners. It all depends upon their appetite, the partner, in terms of what they want to get involved with. But where you've got cases that are very good and that it makes sense in terms of the development and the profit available at the end, then absolutely there are partners out there who would love to come in and get involved.
I think quite important there to make sure that your roles are very clear. don't you think, rather than
Absolutely.
sort of crossover of
And
interest?
that's where good solicitors come involved. If you're getting into a relationship with a stranger in that respect, who is agreed to fund development, then you've got to make sure that you're happy on both sides to who and what you're expecting out of the deal.
Out of the three you've just mentioned, which is the most popular as far as you're concerned?
It used to be high street lending.
Right, okay.
It used to be.
What about now?
But now, a lot of the specialist lenders are taking the market. They're seeing the opportunities at the high street.
Right.
Of deciding to pass on at the moment.
Okay.
It'll change. It's an evolving market at the moment, but there are so many specialist lenders out there who are willing to be flexible,
right,
and to support. And the exciting part of our job is to talk to these people and to get a feel for their appetite and for what's available for our clients.
And crowdfunding, you touched on crowdfunding. Do you get involved in a lot of that yourself?
We do, and I should add, by the way, on crowdfunding, the government actually have their own crowdfunding arrangement. You could call it a crowdfunding arrangement with the British Bank, and of course the British Bank. We are one of the panel introducers to the British Bank in that respect, who are looking to get Britain developing again.
Okay.
And so the market at the moment on the development side is actually quite exciting.
Okay. Yeah. Lovely. Thank you very much, gents. That's all we've got time for in this half of the show. Join me after the break. Hello and welcome back to part 2 of Property Question Time. I'm Stephen Galpin, and joining me are Geoff Vickers and Siadatan. Welcome back, guys.
Thank you.
Zad, your second question.
Yes.
Given that often listed in auctions are repossessions and properties, shall we say, with issues, would this mean that if I were to put my flat into an auction, potential buyers would automatically assume there was some kind of problem with it? Obviously, this might impact on the resultant price achieved. Any advice? I don't think he's wrong, is he?
No.
To a degree.
Yes. I mean, yes, people put their property in the auction because, as I said, for several reasons. It could be it needs work done to it. It could be that they've inherited the property and they need to kind of, they can't agree, the family can't agree in a price, so they think, well, just stick it in the auction and sell it. So there are so many different reasons as to why people put their property in the auction, and the price that is achieved reflects that as well. People assume, it's an assumption that there's always something wrong with the property. It's not always the case. As we discussed earlier on, it could well be that it is perfectly all right property, but they want the money, they want it pretty quickly. Now, we've sold so many properties in the auction whereby it's been a divorce case and they just can't agree on a figure, but one of the partners want the money out quicker than the other one. So they said, that's it, stick in the auction. Now, the property has been absolutely immaculate, but they're willing to take slightly, anything 10, 15, 20% below what it's worth in order to do the transaction, so they can get that divorce done pretty quickly, so they can go their separate way. So never assume that there is something wrong with the property, but remember that there is always a reason why a property comes to the auction, and the reason is always time-based. In my experience, and I've been in this business for over 25, 26 years, when a property is sold in the auction, it's 9 out of 10, 10 out of 10, it's time-based. They want the money and they want it quicker than they would do through the conventional way. That's it, yes. But there's not always something wrong with the property, no.
Okay, so you don't think it would have an adverse effect on the resultant price?
Adverse effect. Now, if you are saying adverse effect, if you as the seller are willing to take slightly lower than what you would achieve on the open market, then then that's the way it is.
But you balance that against time.
Of course.
You? Yeah.
As I said to you, it's time related. Now, if you're willing to wait 3, 4, 5 months to get what the market is willing to give you, but you say, well, I don't have time, I want it done in 28 days, but I'm willing to give some away in order to have it done within 28 days, then, well, that reflects in the price, and that's the way it is. Yes, it's all time-based. It always is. Yes.
Okay. Geoff, just on this subject of buying at auction, Would you expect a lender to be, shall we say, far more inquisitive about the investment or the purchase?
I think
if it was in auction. Yeah.
If it was in auction, but I think it would depend upon the borrower. Again, there is flexibility amongst lenders now that they recognise that auctions are becoming a bigger and bigger part of the sales environment, and therefore they are willing to be more flexible on this.
Yes,
without a doubt. And as a result of that, we are seeing far more comfort with lenders and people buying through auction. No doubt about that.
I've never had a lender turn down lending on an auction property yet, only because obviously there is enough cushion in the price built in for the lender to go, okay, I'm willing to lend. So I don't think any lenders shied away from lending.
So.
Yes.
No, correct.
Interesting. I don't know whether you guys think the same on this. I'm just seeing a sort of division of the market in property sales, really. I think we've got the advent of purely digital estate agents. Tends to be at the lower end of the market, because I think at the higher end people still want their hand holding, don't they, with a person. We're getting a much stronger presence of auction houses in the industry, and I'm also seeing that some of the estate agents are tending to now stick to a particular niche in the market rather than try and cover everything from a ex sort of council house right up to a country mansion. There's certainly divisions arising.
I think it's where the value of the experience of the agent comes into play. I think it's the same in our business as well. It's a people business, isn't it, where people want to have advice from somebody who has that experience. Where it's straightforward and it can be done through a basic process. Then I think that's where we're seeing the digital businesses coming in and taking that part of the market. But there is still a big call for experience and professional advice.
And it's a very much mindset as well. So if an agent has worked for a company who's been dealing with multi-million-pound properties for the last 10 years, and he would decide to go and set up his own, he will certainly set up something that is what he's been taught and has experience in. He won't go to the bottom of the market. He won't go to £1 million property. He'll go to what he's used to.
To the sector he knows.
Sector he knows. So, and that's basically how it works. However, as you say, while years ago people would cover a wide spectrum, now there is more mileage in dealing with a niche market than it is overall, because of the digital age and everything else has come in, and they've taken the whole lot. So it's easier for them to concentrate in a niche market than it is to take the whole market.
It is becoming more specialist. I mean, I know if you're critical of the estate agency business, you'd say in a good market, all you need is order takers, who just answer the phone and say yes. But the test comes in the bad market, doesn't it?
Of course. It does. And if you remember back into the good old days of the late 80s, when banks and insurance companies were buying estate agents up in those days, they thought it was an easy market to move into. And then when the dual Myras tax relief destroyed the market in the late 80s, they were pretty much going from acquisitions to disposals overnight.
Yes, very quickly.
Yeah, very much so.
All right, gents, thank you for that. So, Geoff, your second and final question of the show. The government seems to be discouraging the smaller investor from entering the buy-to-let market, which I had always thought to be both a worthwhile and indeed profitable opportunity for the smaller investor. Are readily accessible funds still available for this kind of investment, or have they dried up in the light of the government's attitude? And I mean, I think there, just reading between the lines, he's referring to the tax changes that now they're encouraging buy-to-let owners to have limited companies, which of course the government can track from a fiscal point of view. And I suppose also the bigger investor is easier to just monitor and regulate. I guess that's what it's about.
And I think he's comparing the market to the boom days of buy-to-let market back in the early 2000s, when Granny was buying flats for their children, to rent at university, and you could get 90% BTL LTVs. And I think it was inevitable that that market had to be regulated, and the lenders were fully on board with that. So I wouldn't say it was just the government that were driving that. And of course, when COVID hit in the beginning of the year, and we went into lockdown in April, the market came to a shuddering halt. There's no doubt about that, for a couple of months. However, I can assure you now the market is back to where it was pre-COVID at the moment.
Right.
Lenders are bringing their LTVs back to some kind of normality.
What is normality?
Normality.
Now?
Well, you're not going to get 90% buy-to-let mortgages.
They've gone, no,
they've been gone for a long time. But you can get 70-75% LTVs if you're shopping around. There's no doubt about that. And it's got to work, and the income's got to work. And don't forget, of course, the government and lenders are very worried about rental voids. And as a result of that, they want to ensure that those who are moving into the market have got that cushion to protect them should there be any issues going forward on this. So absolutely, it's a dual purpose of regulating the market, but at the same time, there is still appetite out there, and I think it's still a good investment. I think that's important to say.
Geoff, going back to the original idea of buy-to-let was to solve the housing shortages that we had for the private rental sector, because councils couldn't keep up with the demand. And I'm just going back to 2008, really. Were these 90 or even 100% mortgage, were they ever really a problem in this country?
Well,
didn't we not just suffer from the American subprime market with them packaging up loans and dishing them out to all the suckers that would buy the portfolio?
I think the banks would argue that they had probably a lot of lending that didn't. When the property market starts to fall, that's when you have the issues, and the valuations start to fall. That's when you have the issues. I don't think in the last 10 years we've had that big issue. You're right. But
I just wonder what the repossession rates were then and now, perhaps. It might be an interesting.
Yes, indeed. But there's no doubt about it. Some of the lenders have been concerned about the property price bubble, and they want to make sure that it doesn't get out of hand again, and it doesn't go back to the bad old days of the 90s.
All right. Gents, on that note, we're going to end the show, so I'm going to say a big thank you to Siadatan.
Thank you.
Thank you.
Good to have you on the show, Zad. And Geoff Vickers, thank you very much. Hope you've enjoyed your first show with us.
I have indeed enjoyed it. I hope you welcome me back someday.
Sure will. Okay, I'm Stephen Galpin. Thank you for watching, and join me next time on Property Question Time.